SpaceX just went up 19% in a single day. The most anticipated stock market debut in history is now a reality, and it is reshaping the entire tech and space investment landscape. We are talking about a company that hit a market cap of over $2 trillion on its very first day of trading. This is not just a record. This is a new era. Welcome back to AI Assets, the channel where we break down the biggest news in AI and tech investing every single day. Today, it is all about SpaceX, ticker SPCX, and why what happened yesterday on Nasdaq is so much bigger than just an impressive IPO number. Let us start with the basics. SpaceX went public on June 12, 2026 on the Nasdaq. The IPO price was set at $135 per share. That gave SpaceX a starting valuation of approximately $1,750 billion, the highest valuation any company has ever carried into a public market debut. The stock opened at $150. That was already plus 11% from the bell. But the market was not done. During the session, the price surged to $176.52, nearly 31% above the IPO price. By the close, SPCX settled at $160.95, a gain of 19% on day one. That number looks impressive, but it does not tell the full story. Let us talk about investor context, what this news actually means for you as an investor right now. SpaceX is no longer just a rocket company. It is now a publicly traded megacap with a market cap exceeding $2 trillion, which immediately places it among the 6 most valuable companies in the United States. That affects indices. That affects ETFs. That forces portfolio managers around the world to reposition their holdings. Think about how NVIDIA transformed the semiconductor landscape when it exploded in value. SpaceX is doing something similar with space and communications infrastructure. Starlink, the company's satellite-based internet service, now has more than 100 million active users globally. That is not a side project. That is one of the most scalable network platforms on the planet. For investors, this means companies exposed to SpaceX's ecosystem are suddenly far more relevant. That includes space tech suppliers, satellite manufacturers, and companies operating in global connectivity. Think also about Tesla. Elon Musk now holds combined equity that makes him the world's first dollar trillionaire. That creates a psychological premium around every company he touches, and that premium is volatile. For the short-term investor, the momentum is clear. For the long-term investor, the real question is understanding Starlink's true potential as global infrastructure. Those two perspectives require completely different strategies. Now let us get to what the market is missing, and this is the angle you are not hearing from the big financial media houses. Everyone is talking about rocket launches, Mars colonization, and Elon Musk's net worth. That is great television. But that is not where the real money is. SpaceX is actively positioning Starlink as an AI infrastructure platform. The latest Starlink V3 satellites carry a capacity of 1 terabit per second, 10 times more than previous generations. What that means in practice is that SpaceX is building a global, low-latency data network in orbit around Earth. That is the backbone that next-generation distributed AI systems could run on. We are currently in an environment where the biggest tech companies, Amazon, Microsoft, Google, and Meta, are together spending $725 billion in capital expenditure during 2026 alone. A massive portion of that goes into data centers. But ground-based data centers have limitations. They are expensive to cool, difficult to scale globally, and concentrated in a handful of geographies. SpaceX solves that problem from space. And almost no one in mainstream financial media is talking about it. They see a rocket company. Smart investors should see a global AI network operator with no terrestrial competitor. That is a critical distinction, and it is not priced into today's share price. So what happens next? That is the question that determines whether SPCX is a buy, a hold, or a trap. 3 things to watch very closely over the coming weeks. The first is the lockup expiration. Insiders and early investors typically face a lockup period of 90 to 180 days after an IPO. When that window expires, we could see significant selling pressure. Mark your calendars for September and December 2026 as key inflection points. The second is Starlink's revenue reports. SpaceX is now a public company with full disclosure requirements. The first quarterly earnings report as a public company is expected in mid-August. That is the report you absolutely cannot miss. If Starlink's revenue growth beats analyst estimates, we could see another surge. If not, and if the cost base for the Starship program shows up clearly on the balance sheet, the reaction could be sharp and painful. The third is Tesla correlation. Historically, Tesla and SpaceX have moved in sync with Musk's news cycle. Now that SpaceX is separately listed, that correlation could break or it could intensify. If Tesla posts weak numbers next quarter and the media frames it as Musk being distracted by SpaceX, SPCX could get dragged down alongside it. Or the reverse could happen. That dynamic is brand new and completely untested. Smart positioning right now? Watch for the stock to find a base over the next 10 to 15 trading sessions. IPO stocks almost always carry extreme volatility in the first month. A consolidation around $150 could represent a better entry point for anyone seeking long-term exposure. This is one of the most defining financial moments of 2026. SpaceX is no longer a private dream. It is a public megacap with revenues, liabilities, reporting obligations, and full market forces to contend with. That makes it more interesting and far more complex than most people realize. AI Assets is here to break down exactly that complexity every single day. If you have not subscribed yet, do it right now. See you in the next one.